Let's give you the details on it. They're talking about a collaboration of 10 gigawatts of custom AI accelerators. OpenAI designing these accelerators and systems. They'll be developed and deployed in partnership with Broadcom. Essentially their own chips and systems for OpenAI that they can embed, and again, I'm reading from the release here, what is learned from developing frontier models and products directly into the hardware, Jim. Now, as opposed to that NVIDIA deal, which captured the market's imagination a couple of weeks back, there's no money changing hands here. And it's different, obviously, than the Oracle deal, which has never been fully confirmed, but which news reports have it some $300 billion in terms of building compute for OpenAI, essentially, over the next 5 years. This is for them to develop their own chips, conceivably, I would think, to bring down the overall cost, because as you well know, cost per token is sort of a key thing we're watching here in terms of these LLMs and the like. And they got to bring their costs down if they're ever going to hit the kind of numbers they need to deal with how much they've got going out the door and how much the losses are ultimately going to be, at least in the near term.
Well, look, I'm glad I have Greg Brockman, OpenAI co-founder and president, and I also have Charlie Callis, who's the Broadcom president, in a few minutes to be able to talk more about this deal. Sarah, you talk to a lot of people, you talk to a lot of bankers, and you know that what's happening here is OpenAI, without having any real money in to be able to make these deals, continues to make them. I believe also, I can't wait to speak to Oracle and David, because they continue to make them. At the heart of all this is either a belief that this whole thing is precipitating the giant bubble. This is separate from the raw earth mineral bubble, or it's you as OpenAI has said over and over again, hey, get with it. This is an industrial revolution, and the people who move first win. I don't know, Sarah. I heard Pat Gelsinger talk earlier about how it's all a bubble, but Pat's out.
I don't know.
These guys are in, and I think that the guys who are in are driving it, and if they have the money, they're going to take it.
Here's the case against the bubble that I hear actually from a lot of people that I trust. It's not being driven by irrational speculation, right? Well, we don't know exactly. I mean, and I guess it hasn't been proven to be profitable growth ultimately, but it is being driven by fundamental growth. And if you look, definitely OpenAI is at the heart of it. But if you look in the public market at the companies that are at the heart of it, it's dominated by a few incumbents that have very strong balance sheets and very strong growth, Jim, and that to me that's the best case against it, the whole bubble mentality. But I do, it is notable that OpenAI is at the center of a lot of these deals, and that's not a public company; it's a private company. So and they're crafting these increasingly creative deals, as you mentioned, because they're not profitable. They need to spend a ton of capital.
You're absolutely right. I mean, look, I think that the bubble analysis has a lot to do with, boy, if we really get into the nitty-gritty that David's more familiar with than anybody, well, it was about fiber and about lighting fiber and be able to connect the internet. But there was far less demand than there was supply of fiber. Here, if you listen to OpenAI, there's a great podcast they did with Hock Tan this weekend. And David is a Hock Tan, hard businessman, not a guy who's part of a bubble. It's about demand. They cannot meet demand. No matter how quickly they put up things, they cannot meet demand. Now, David, doesn't real demand dignify it versus what happened in 2000?
Without a doubt, I think, but that continues to be the key question. I mean, all the leaders in this arena, and it's funny because, as you might imagine, in preparing for my interview that'll be a couple hours from now, going back and looking at things that Larry Ellison has said most recently on the earnings call from Oracle, the tsunami that is coming, the fact that inference is going to be far larger than training models in terms of what that's going to require for compute and so many other things. And then so many other leaders in this business who are absolutely 100% committed to the idea that this is life-changing in every way. Jim, they don't question that, but what the revenue picture is going to look like, what it's going to look like in terms of what the enterprise ultimately is doing and what they're spending, what the consumer applications are going to be. I mean, we still don't obviously know. We only know that they all believe if you build it, they will come. And we continue to see this sort of positive circular motion upward, essentially, as everybody invests more and more, particularly OpenAI, which now has commitments, the likes of over $1 trillion in these coming years in terms of building out its compute, now designing its own chips with Broadcom and the like. And just to come back to the power side of it, 10 gigawatts I mean, you know, I'm just making sure I remember this. You can't even begin to imagine. It's 876,000 homes, 1 gigawatt.
Right.
So if you 10 gigawatts, I mean, it's 9 million homes you're powering. That's, you know, that's the enormity of what we're talking about here.
That's
in terms
the gating
of the power
factor. Needs,
which is how all this is measured. Yeah.
That is the gating factor. The one thing I'm going to differ with you, David, and I hate different with you, but I think if you build authority there, and that's the difference. And I think you're going to, like, when you talk to Oracle, I think they're going to say, they're there. I mean, we got to meet this demand because everybody wants the fourth industrial revolution. And if that's the case, when you speak to Mike and Clay, I think what they're going to say is, look, we can't build them fast enough. We wish we had enough power. We'll get enough power. The power grid's going to have to grow 5%. People are going to have to realize this is coming. We need nuclear. Because, you know, David, I don't know. It all sounds fanciful. At the same time, if you listen to Jensen Huang, who is the godfather of this move, he cannot meet demand. And if you can't meet demand, what do? You just say, you know what? It's a bubble. I'm not going to take your orders. Is that what you're supposed to do? Pat Gelsinger, former CEO of Intel. Are you supposed to say to them, I'm not taking those orders? You know why? Because it's a bubble. How can that be just? Would you just say, hey, I'm not taking those orders? It's fanciful.
But I think, David, what you're saying is
I mean,
never
he's made
before
everything
has
a lot
so
more.
much. Has so much money been spent so rapidly on an unproven profit, right? An unproven profit engine.
Yes. I mean, I think we have to wait and see. There seems to be no doubt in terms of the confidence of all the important business leaders that will be there, Sarah, but you're right. And by the way, NVIDIA, of course, you know, those 80% profit margins that it has, that's where it makes so many things so much more expensive here, ultimately, when you're talking about the data center. And that's why so much of the value so far has gone to a certain extent towards NVIDIA's share price and its market cap that exceeds $4.5 trillion as we get started with trading.
I want people to understand that there's an NVIDIA deal that NVIDIA gave you $100 billion. I know a lot of people are thinking, there was a previous guest, Pat Gelsinger, saying, oh, yeah, you give them 100, you give them big money, they then give you the same thing, the circular deal analysis. But I've now heard a second deal that had nothing to do whatsoever with the NVIDIA infusion, other than the fact that NVIDIA is making a good bet on what I think is a company that could be worth a couple trillion.
Yeah, I mean, the way that we think about this is that I think actually figuring out how to build this compute is extremely difficult, and it's going to require financing in different mechanisms. And so we've really been going to the industry to say, hey, how can we possibly get ahead of this sort of avalanche of demand we see coming our way?
Avalanche of demand, not hoping for avalanche, but avalanche.
We are currently being swept along by the avalanche.
It's like between last month and this month, how much more business do you have?
Quite a lot. So, I mean, first of all, Sora did not exist a month ago, and it's now the number.
Sora's pretty cool. I've been playing with it.
Oh, I'm glad to hear it. It's so much fun. It's so much fun. And I think it just shows you how quickly these AI products get adopted, right? It's like we've never seen growth like this. So ChatGPT was the fastest growing consumer app in history, but actually Sora is now even faster.
Incredible.
Well, a piece in the journal saying OpenAI's revenues this year about $13 billion. It's going to take hundreds of billions of dollars to really pay for all these different deals. So they would have to have a massive escalation in revenue just to pay for all these different deals. But even, you know, Broadcom deal, all the other deals out there. Jenny, I know you had a thought about this as well.
I have two thoughts. When we talk about it, I think we're at over $1 trillion of deals or partnerships signed right now. And when I think about the fact that NVIDIA alone has a $4.5 trillion market cap, I think next year they're expected to have just revenues, not earnings, revenues of $300 billion. So how on earth is OpenAI really going to get that $1 trillion? Like, barring putting a printing press in the basement, it seems kind of silly to think that those numbers for here and now today for the market cap creation that they've generated is a little ridiculous.
All right.
Wait, I got one more thing. So when I heard the Broadcom deal this morning, I kind of laughed, and it reminded me of, remember that Oprah episode where it was like, you get a car, and you get a car, and you get a car. I feel like we're in this stage where it's like, you get a partnership, you get a partnership, everyone's getting a partnership. Like, who's next? It's getting crazy out there.
You know, this is more like Shark Tank and semis.
Serious?
Yeah. And, you know, we're in Shark Tank. the vast preponderance of the deals never get consummated.
Yeah.
So they're just, hey, why not? It's not costing me anything. Sure, I'll be an investor.
But is that
It's
a
the
risk for
same
the
thing.
market? Is that one of the risks that Jimmy was talking about?
It's
a moment we need to pay attention to?
So is it a risk for the market? I don't think the market's reasonably spending on that. I think you've got the real buyers with real business models and balance sheets like Meta, like Microsoft and Google and others that are actually doing something. This is, doing deals and can support the deals. Here you can't. So it's circular financing, and I'm not sure that most.
We got to leave the conversation there. I think it's hard to tell Broadcom investors that right now. Shares up about 10.5%. All right.
The main ingredient in bubbles is psychological excess. There's no such thing as a price too high, and I don't detect that level of mania at this time. So I have not put the bubble label on this incident.
My next guest agrees with Marks that we are not in a bubble and still in the early innings of an AI build-out. Today's deal between OpenAI and Broadcom is just another sign of that. Joining me now is Gene Munster, Managing Partner at Deepwater Asset Management. Gene, it's great to have you on, and let's start right there. Why do you think this is not a bubble?
Morgan, I come back to what Satya Nadella said in April, in fact, that AI is going to solve the world's most complex problems. We haven't even scratched the surface. What we saw with Sara 2 more recently, content creation, so much magic around that. What we've seen with the coding side, customer service, we just haven't scratched the surface. And so another piece, if we look at Jensen Huang's comments on CNBC last week, he talked about this, many companies that are going to be mega companies. He referred to them as that are private today, that will be public. And back to this idea about psychology in your previous clip, this euphoria is how can we have euphoria today if the most captivating companies are still in the private markets? They haven't had these breakout meme moments. And so when I look at the fundamentals about where AI can go, the substance about solving the world's greatest problems, when I look at where AI is today, largely a coding tool, customer service, and some consumer generation, content generation, and think about this investment cycle that's going to go on and where these companies are that are most benefiting, I continue to believe that we still have 3 strong years left. And I just want to put kind of a final piece. I think this conversation about a bubble is most healthy for the market. It's good that we just keep shining a light on it. And I want to also emphasize that I don't believe we're going to have a spectacular burst in the bubble. 2 years ago, I had predicted there'll be a big burst. Because there's so much conversation around this, I think it's unlikely that we'll have that outcome. It'll be more like kind of a leveling off in the next few years. So Morgan, still most positive, and on top of that, what we have today with OpenAI and Broadcom, I think it just continues to build in that positive case.
You took the next question out of my mouth, and that is, what are your takeaways from this OpenAI Broadcom deal? When you talk about private companies that haven't had their meme moments, I mean, OpenAI is kind of the pinnacle here, and it has struck a flurry of multi-billion-dollar deals just in the last couple weeks.
So maybe let's just look at OpenAI for a minute here, is that that company, $500 billion valuation, if you look at where it's expected to be in 2030, $200 billion in revenue, it's trading at a revenue multiple, similar kind of at this 13 times as other kind of software companies. So I think that's just some good, healthy perspective if you believe, in fact, that this business can keep doubling. As far as the kind of the cadence of these massive deals, and I think in some respects, there's a narrative around it that it's circular in nature, is that the big companies are kind of propping up. I remember that back in the dot-com days, you'd have advertising businesses selling to other dot-com businesses that kind of propped each other up. This is a very different dynamic. I think what the message, your clip, I think, framed that in well. The message is that the amount of compute that's needed is so mind-boggling, is that they just need to go after that in every capacity. That is a layered approach. It includes off-the-shelf, whether it's NVIDIA, AMD, and separately custom silicon. And so I think that this all plays into this question. And I want to give a very clear takeaway from the conversation. with OpenAI and Broadcom, is what investors should focus in on is on October 29th and October 30th when Google and Amazon report. This is going to be where the rubber is going to hit the road in the near term on this trade. Those two companies are looking for, on average, at least the street is looking for on average, a 10% increase in CapEx in 26 over 25. Now, Meta's at 21% and Meta's at 40% and Microsoft's at 21%, but just 10% for those two. And Morgan, if we see a reiteration of that 10% expectation, that's going to be a negative. I'm going to be wrong in the near term here. But if those two companies bump up their CapEx to around where Microsoft's at, that plus 20%, I think investors are going to breathe a sigh of relief over all the tensions we've had over the last couple of days and continue to have confidence that we're still early.
Is there enough capital and appetite for all of the major players to win, or will some get left behind? Well, joining us now is Vivek Arya from Bank of America. Vivek downgraded Intel to underperform today. It's great to have you on, and let's start right there because you were very busy with the downgrades and the upgrades and the price target changes in your note today.
Yeah, thanks, Morgan. I think a few things are happening. First of all, it's great to see OpenAI make these moves with its different silicon partners, right? First with NVIDIA, then with AMD, next with Broadcom. And OpenAI is the most disruptive force in the generative AI market today. So the better they do, the more it means there is going to be pressure on other hyperscalers to spend. And I think that's great news for semiconductors. The second thing is, just like other cloud service providers, we are seeing OpenAI also have a mix of off-the-shelf or merchant chips as well as custom chips, right? And at most customers, the ratio is about 80-20% or so. Up until so far, OpenAI had essentially been deploying only NVIDIA chips, but now it's diversifying its chip supply into custom chips with the help of Broadcom as well. And then the final point I would make is that, OpenAI is the most disruptive force for sure, but we do think it's going to be one of many different AI ecosystems that develops over the next few years that can essentially triple the spending from $300 to $400 billion to over $1 trillion by the end of this decade. So we are extremely bullish on the AI market.
So when you make a comment like that, is the read-through then that while we're seeing a flurry of OpenAI deals right now, you expect that there's going to be a flurry more with other names of rivals in the space to OpenAI?
Yeah, I will be, in fact, surprised if we don't see those kind of deals, because, again, with OpenAI, what is you have someone who is able to go and disrupt many different markets, right? Social, search, e-commerce, right? Streaming, video. Their Sara software is one of the top downloaded softwares on a consumer platform, so they can even go after the consumer market. So because their tentacles are going into so many different end markets and so many different models, we are assuming that the incumbents in those markets will have to respond. And the way they respond is by building enough computing infrastructure on their own to go and serve these different use cases. So yeah, I'll actually be very surprised if we don't see other hyperscalers step up and increase their investments in building out this AI infrastructure.
Vivek, earlier this summer, when I was speaking with AWS CEO Matt Garman, he was suggesting that their infrastructure build-out strategy is a bit more, careful. So I wonder, is this a game of infrastructure chicken? What if there's an air pocket from one of the hyperscalers or more in AI demand? I mean, sure, OpenAI is spending, I think they're even arguing, ahead of demand, but how many different stocks get affected here if there's a sense that maybe the pace and momentum of this infrastructure buying isn't constant?
Sure. No, John, I would agree with that. I think the constraints here are essentially access to power. It's the build out of data centers. I do think CapEx, of course, and financing matters, but I think that matters more in the medium to longer term. In the more near term, I think it's really access to data center and its access to power. And when you look at the next 9 to 12 months or so, if you are a cloud service provider and you want to build out any kind of capacity, you would have better put in orders to the likes of NVIDIA and Broadcom and AMD and Marvell already. Because if you have not put in those levels of orders, you're not going to get those chips, right? It takes several months for these chips to cycle through Taiwan Semi, get memory, get packaged, right. Get put into rack scale systems and so forth. So I think for the next year, the industry is pretty well set. Beyond that,
but let me put it differently. If there's a glitch in the backlog numbers, which set of stocks is going to suffer first and most?
Well, keep in mind, it's not one customer, right? You have many different build-outs from Meta, from Microsoft, from Amazon, from Google, from OpenAI. Don't forget there are 100 different neo clouds out there. Don't forget that there's a lot of sovereign build-outs, right? The Middle East is building out a lot of infrastructure. So can there be a glitch? Absolutely. I mean, the nature of infrastructure deployments is that they are never, linear and up and to the right. There are going to be periods of digestion in between. But because there is a diversity of customers, we think that, these so-called glitches, might be isolated to one or two customers, whereas the broader build-out continues on track. But who will be impacted? All of semiconductors will be impacted, because I think to the points you made before, AI is such an overwhelming force for the semiconductor industry, right now, that if there are those periods of digestion, like we saw that one-day affair with DeepSeek, right? Everyone in semiconductors got impacted more or less.
All right, I hope you're all doing great today. Today, OpenAI and Broadcom announced a partnership to co-design and deploy 10 gigawatts of AI accelerators starting in the second half of 2026. Also today, Broadcom's president clarified that Broadcom's mystery $10 billion customer that was reported last month is not OpenAI, meaning demand is even stronger than what was previously thought. OpenAI's Brockman posted about the deal on X, mentioning that it is on top of OpenAI's deals with NVIDIA and AMD, saying, quote, "The world needs more compute." In other words, there's plenty of room in this market for NVIDIA, AMD, and Broadcom to all succeed. And OpenAI is desperate for more compute as they are seeing extremely strong demand. As a reminder, ChatGPT now has over 800 million weekly active users and may reach 1 billion users by the end of this year. I don't view today's news as bad for NVIDIA. I view it as another indication that the world is severely compute constrained in the face of extremely strong AI demand. Speaking of NVIDIA, today we learned that both Meta and Oracle will adopt NVIDIA Spectrum-X Ethernet switches to accelerate AI networking. Oracle will build gigascale AI factories accelerated by NVIDIA's Vera Rubin architecture and interconnected by Spectrum-X Ethernet. And Meta will integrate Spectrum Ethernet switches into its networking infrastructure for the Facebook Open Switching System. This bodes very well for NVIDIA's growing networking business. Very briefly, I'll mention a couple other stocks. MP Materials had a fantastic day today following concerns about the China trade situation and rare earths. I continue to be bullish on MP over the next 5 to 10 years, as I've discussed in previous videos. You can find those videos posted on the channel homepage if you want to know more. Also, iron recovered nicely from its Friday lows following signs of de-escalation this past weekend from both China and the US. I continue to be bullish on iron over the next 1 to 2 years, and I encourage you to research the company. As I said in multiple videos last week, if you're going to invest in iron, it is important to research the company and have at least a basic understanding of the company so that you will not be scared out of your position when a pullback occurs. There is a video of iron's co-CEO posted on the channel homepage, which can serve as a nice starting point if you want to learn more about iron. Now back to NVIDIA. As I've said many times in recent videos, this AI revolution is not the same as the dot-com bubble. Are there similarities? Sure, but there are also fundamental differences in multiple key areas. First, the largest spenders in this AI revolution have the deepest corporate balance sheets in the world. Second, the largest spenders are primarily funding their AI investments by means of their own cash flows. That was not the case during the dot-com era. Third, the largest spenders are not aimlessly investing in AI infrastructure in the hopes of eventually finding a use for it. They already have multiple uses for it, and they're investing heavily in an attempt to meet extremely strong demand from their paying customers. And fourth, the development of new use cases and mass public adoption of the technology are both going to happen much faster than they did during the early days of the internet, because the internet is already here, making new use case development and mass public adoption immediately possible. This drastically reduces the risk of long digestion periods and overbuilds of capacity like what we saw in the early days of the internet. On that note, OpenAI's Brockman reposted a chart from the Financial Times over the weekend highlighting that public adoption is happening substantially faster than it did during the early days of the internet. This chart is another reaffirmation of what I've been saying for months. All of that to say that I don't think we are anywhere near any type of bubble bursting type of event, not even close. Now, will there eventually be an overbuild of capacity? Possibly at some point, but I honestly think we are at least 3 to 5 years away from something like that happening if it happens at all. Jensen seems to agree with this, as he recently said on the BG Squared podcast that we will not hit a glut in demand for at least a few years. And beyond that point, we have to remember that new use cases will be developed over the coming years, and the development of new use cases will increase the need for compute even further. This is clearly evident when we consider that we are at the very early stages of the oncoming wave of physical AI. I think we will see many new use cases develop from this emerging industry. And again, new use cases will increase the need for more compute. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested, and NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA GTC, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. We're no longer talking about AI agents that complete digital tasks. We're now talking about physical AI agents that complete physical tasks in the real world. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. The next time you hear someone worried about NVIDIA being a bubble, remember that we are still in the early stages of AI, and we are still in the very early stages of physical AI. And that's not even considering the other large growth opportunities that NVIDIA is really just starting to capitalize on in a meaningful way, including sovereign AI, enterprise AI, which Jensen believes is an opportunity worth hundreds of billions of dollars, many AI native startups, and quantum computing. NVIDIA is already working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform. And Jensen told us that the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. Just as NVIDIA used their GPUs to speed up CPUs, they're now going to do the same thing with QPUs. Will some parts of the AI ecosystem eventually end up in a bubble? Yes, some probably will. But is NVIDIA a bubble? Or is AI as a whole a bubble? Not all. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.